Street. Now, that said, as we move on to talk more about the markets, the economy is not bad after all. At least that's the view of my next guest, and he's not overly concerned about the weakness that we've been talking about in housing either. I'm joined now for a look at whether the bullish sentiment has returned to stocks by Joseph Parnes, the founder and president of Technomart Investment Advisors and also the editor of the investment newsletter, Short Text. Thanks very much for coming in tonight. We appreciate your time.
Thank you for having me on.
What about this? You're fairly bullish on the market. That's for technical reasons. I know that's the way you look at it.
Yeah.
Explain your point of view.
Yeah, I think so. I think if you look back, whenever you have sort of a meltdown like we just had before, you just got to go back to the history, and you'll find out that eventually the market prevails. For example, the 87 crash that we had with 500 points or so. Then we had the Southeast financial crisis in 98, in 97 rather, and then we had the Russians financial crisis in 98. And I wouldn't be surprised. This one from the Shanghai crisis, this one also will prevail. And the market's action leads you to believe that the market is really ready for the recouping of what it has lost.
Now, this particular crisis, if you want to call it that, or trouble in the market, a lot of people are pinning on the subprime mortgage situation, saying, and one of the arguments is this kind of bottom-up fear that if there's problems in subprime, people can't get loans and people kind of on the lower end of the housing market won't be able to sell their homes, so on and so forth as it carries its way, and there's a quote-unquote spillover effect. Why is that not such a big deal?
Well, that's exactly what you just said is a really good omen for the market because it creates a negative sentiment. We were really extremely complacent. Whenever you have some sort of a negative to a point that a pendulum sort of swings to the other side, that gives some sort of a stimulus to the market to come back up. Nobody really knows how much the extent of this subprime problem is. However, I believe if it is any problem as such, that the Federal Reserve will probably come in and will save, or at least will rescue through any liquidity crisis, if any, just like they did in the 87 crash.
Seems what investors are counting on right now is a Fed rate cut to kind of bail them out, as you say.
I think the market was really looking for the rate cut to begin with. In this past 7 months that we have seen that the market is coming up, what really gives the stimulus to the market is that they're no longer going to increase rates. When they're going to cut the rates is a question mark. They have to see some more indicators to come in to see whether the economy needs that kind of a rates down or not, because the Federal Reserve is really forced to maintain the rates as they are in order to boost the value of the dollar in the marketplace, globally speaking.
All right, so that's the setup, if you will. Let's talk about some of the stocks you think are good ones that investors should buy in this particular environment. Now, I should point out as we start this, interestingly enough, all these stocks we're going to talk about that you're picking are either at or very near their 52-week highs.
Exactly.
Estee Lauder is one of them. Talk about that one first of all.
Exactly. I like to pick up stocks that I think that can weather the storm. That means to go back. Whenever you see some sort of a meltdown like this, the market just is not going to go in a V shape. Chances are it will need some sort of a stabilizing before really it gets its footing to go forward. So therefore, you have to pick up stocks that has done well in the past 3, 6, and 12 months. And these are the numbers that I have picked up on this particular one. Estee Lauder is one of them, for example, you just indicated. Yeah. Definitely is in a very good marketplace, which is for the take care of for the women, for fragrance, for the skin care, and so on and so on. And they have really been successful globally speaking. They expect to have a growth rate of almost 10 to 12% for the next till 2010. For that reason, I think they maintain to go through it.
Another one that you like is CMI, Cummins, which is a company that makes diesel engines and what have you. Why do you like this stock? And again, are you concerned that a company like this has already had too nice of a run?
The company has had a very nice run, and I think continue to do so. The earning power behind it is really what makes me believe that you should be accumulating. It's globally set up. The company is powerful in diesels and various subjects of the engines, and for that reason, if they're going to earn between $11 and $15 a share, I mean 11 and a half or $11 a share, really the value of the stock of 147 is not even 10 times earnings. So therefore, it's really worthwhile having it.
All right, thank you for your time and your perspective, Joseph. We appreciate it.
Thank you for having me on.
Joseph Parnes at Technomart joining us live tonight. Now, air travel between